Hello traders, Gary Wagner here just after 1:30 in Honolulu, 6:30 in New York. It is Thursday, January 18th, 2018, and this is the Daily Report for Gold and Silver. Well, it was bound to happen at some point. What goes up typically comes down, and we had gold selling off fairly severely today, actually closing off about $13 on the day. Now, it closed at $13.28, and the net change you're seeing is up 80 cents. That's reflecting the afternoon session, not the morning trade in which it traded much lower. Silver up 2 cents, but once again, that's reflecting the afternoon trade, $16.97. Dollar, in essence, unchanged in the aftermarket activity, but it was up earlier at 90.30. That all in light of a U.S. equities markets that is selling off softly, down about 98 points in the Dow Jones Industrial Average, but still above 26,000, 26,017. Big news again is Bitcoin continues its historic decline. After reaching record highs of 20,000, it is now trading at just about 10 and 11,000. We've seen a 50% decline from the highs within the last month. CBOE Bitcoin futures at 10,710 and the CME at 11,290. Traders, over the last couple of days, we have seen market trading action result in a single candlestick type that is called a doji. A doji is simply a daily candlestick in which the open and close are identical or one or two ticks apart. We can certainly see that over the last 3 trading days, we've actually had that occur 3 different times. We've got 3 different dojis right in here. And today's candlestick and trading has actually taken the market down, currently trading off by about $12.20 at $13.27 with a low today of $13.24. We'll talk about that low because it's important as it refers to our stop. Now, what we have identified today as this third doji came in is a pattern known as a tri-star top. There are tri-star tops as well as tri-star bottoms, and it is an extremely rare pattern. What we're looking at right now is actually a variation off of that pattern, and I'll discuss the reason I'm labeling it as a variation. Here's a variation of a tri-star bottom when we consider these 3 candles here. The reason, again, that I'm labeling it as a variation rather than an actual tri-star is you don't really have what we would call a true doji, because as you can see, the real body size is small. It does categorize as a star or a spinning top depending on its location to the other candles. But in essence, what we are looking at is really a variation off of that pattern, the tri-star bottom. And as you can see, it certainly gave us a strong indication that the bearish trend that had been fully in place as this market came down had come to a conclusion. In terms of the pattern we're identifying now, it is a tri-star top. And as you can see, it is simply 3 dojis in which, as the market rises, the first thing that you get is the first occurrence of a doji. So you've got the market rising, you've got this large green candle, and then that's capped by a doji. It's really a doji star. Now, if you were to get a red candle that was a large bodied candle below the real body of this doji, what that would be telling you is that you would have a 3-river evening star. However, that is not the case because you get the first occurrence of a doji. On the following day, you get a doji that opens and closes above. That would be the representation of this doji, this being our first doji. And what completes the pattern group, of course, is the third doji, therefore a tri-star top. However, in the case of this particular pattern, you can see that it falls far below the body itself of the first of these 3 candles. That would have had to happen here. Nonetheless, though, it is a variation off of this pattern group and can absolutely signal a pretty strong reversal and, more importantly, a conclusion to the current uptrend that has been so prevalent and in place. So traders, based upon the pattern group that we spoke about today, the TriStar top, it is my belief that there's a pretty high probability that we will in fact see this market begin to retrace. If it does, to me that's not unusual. Think about it this way. We had a $100 rally moving up, and now we're moving into some sort of a corrective phase. So that if the market does continue lower, we will get stopped out with a nice profit at 1320. At the same time, if the market consolidates by some slim chance and moves higher off of this price point, we maintain our long position. Now, let's assume that the market does correct, we pull profits in, and in fact have a neutral stance. Where would we look for the market to go to? The first thing is we're going to move out to another contract month, the April gold contract. So the pricing is about $4 different, but my sense is that a shallow correction would take you to 1320, but more likely to about 1304. That would be the 38% retracement level, and that to me would be an acceptable correction before returning to rally mode. And traders, as far as Bitcoin futures go, we had an extreme low that came into the market today, basically $9,000 per Bitcoin. You can see that by this low here. You also got a recovery on the close. Now realize this is a short-term 4-hour candlestick chart. Each candlestick represents 4 hours, and you do get this engulfing bullish. However, I believe that we do not have technical confirmation that a solid base is formed and that a bottom is in place. I still believe there is room both on the downside and upside, and the one thing that I am fairly certain about is we will see an increase in volatility and an increase in range. Traders, I want to thank you for those of you that answered our short survey, and we will incorporate a lot of the ideas and comments into the program itself. I wanted to answer one question directly, and that is stop placement, the difference between if I say place below, just below, or below, and why don't I actually give an actual number out? Whether it's superstition or not, I don't like to actually put the number out of the stop. When I say just below, I'm talking about in gold, $1, $1.50 maximum. If I say below, you can go $2 or $3 below the actual number. And the reason that I give it some sort of variance is to account for a range in which the market trades at, so it can actually go to that range but then recover quite easily. So I hope that answers that particular question. Over the next couple of days, we will work through these comments and questions one by one and attempt to answer each and every one of them. And please, if you have not filled out the survey we sent out yesterday, it's very, very important to us so that we can make this show your show. Traders, I do want to thank those that responded to our survey and gave us some very, very useful comments that we will integrate into the show to make the show a better show for you. I am going to be spending the next couple of days taking what we consider to be very high priority questions and answering them throughout the show. For those that have not taken the time, it's only about 4 questions, and if there's something that you want to see in your gold forecast report, the way to do it is to let us know. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review.